Intel shares climbing this morning after Apollo Global Management, parent company of Yahoo Finance, reportedly offered to make a multi-billion-dollar investment, according to Bloomberg. Now, this comes just days after a report revealed Qualcomm is exploring a takeover. Joining us now to weigh in is Stacy Rasgon, who is the Bernstein managing director and senior analyst here. Okay, Stacy, you got to give us your assessment here, especially as all eyes are on Intel this morning, both from an investment point and potentially from a takeover point as well.
Yeah. Let's talk about the potential takeover first. So there were some news stories at the very tail end of the day on Friday that indicated that Qualcomm might be thinking about making a bid for the company. So I don't know. Like, neither company has commented at this point. I guess we'll see. I will be honest. So we did some work on that. We published it this morning. I have a hard time seeing that deal work, especially if the fabs are included. And the issue is that they're losing a lot of money right now, and it's a big deal. Qualcomm would probably have to use a lot of stock. If they did a stock deal, it's significantly dilutive for Qualcomm, could be 20% or even more dilutive. And the problem is if they start borrowing money and adding cash, the leverage goes up really, really high, really, really quickly. So I have a really hard time seeing it work with the fabs. I'm not sure that they could do a deal without the fabs, though, because I don't really think you can spin them off. They can't stand alone by themselves as their own company. They're losing billions of dollars a year, and they have one customer. I don't think anybody really wants to buy them and run them, and I don't think they can just scrap them. I don't think that that's politically viable at this point. So I guess we'll wait and see. We'll see if something comes out of this. But I will be honest. I'd rather not see Qualcomm do a deal like this. I think it's hard to do a deal where I think the risk would justify the returns on this. We'll see if they can construct something, but I don't really like it. So I'm hoping we don't have something like this.
Stacy, what about the interest from Apollo, the up to $5 billion investment interest? I guess you would look at that as that could be a sign that's encouraging, at least for Intel.
Yes and no. So they already have a relationship with Apollo. So they just sold half of their Ireland fab 34, I think, to Apollo for $11 billion. They actually got that money last quarter. And in return, they have to load that fab preferentially. And they have to, they've effectively guaranteed Apollo a return on that. So they're paying them off of that. But they have a relationship already. So the story this morning said Apollo was potentially considering an equity-like investment, whatever that means, for up to $5 billion. Again, neither company has commented at this point. Obviously, I guess you could read it on the surface as like a vote of confidence, I suppose. However, I'm also kind of old and I'm kind of pessimistic. And I kind of feel like if you need help from the private equity companies, you're already in a bad place. That's usually not something that you would want to take if you didn't have to take it. They don't work for free. So I really do wonder, like, if they are considering something, like, why? Like, do they actually need it? My own personal opinion is that they're not desperate for cash. I don't think so. Given the OPEX cuts and the CAPEX cuts and the dividend suspension and the government subsidies, as well as the other private equity funds that they've gotten already for selling pieces of the fab to Apollo and also to Brookfield, I think that's enough cash. I don't think that they need any more. So I guess we'll have to see. But again, same thing. You don't really want to take private equity money, I think, if you don't have to take it. So.
All right, so Stacey, they're not desperate enough. You have questions about fabs, but then also just the regulatory side of things too, going back to Qualcomm. Is that something that's almost could potentially stop this deal in its tracks?
Yeah, I think it's really tough. So, and by the way, like, any semiconductor deal for anybody needs regulatory approval effectively everywhere, because they all sell everywhere, and you need the U.S. and Europe, and in particular, you would need China. So we'll see about the U.S. if something like this happens. At least it would sort of be like a U.S. national champion buying a national champion. Maybe that makes it easier in the U.S., but I don't see any reason why China would go after this. I mean, a weaker Intel and a weaker U.S. semiconductor manufacturing base is probably a positive for China. And frankly, I also have flashbacks to the Qualcomm NXP deal. Your listeners may not remember, but Qualcomm tried to buy NXP back in, I think it was like 2018, 2019 kind of time frame. Mm-hmm. And that was the big problem. They got approval everywhere. There was no reason, like structure, that it shouldn't have got approved, but China did not approve it. And they actually didn't even turn it down. They just sat on it for almost 2 years, for 20 months, until they just couldn't wait any longer. And this was during the prior Trump administration. But even so, I wouldn't say that, like, relationships with China have gotten better since then. And so, yeah, I think China approval is a huge issue. I don't really know how they get around that.
Yeah, that acquisition attempt terminated back in 2018.
Oh, yeah.
A 2 years long process, essentially, here. Just lastly, while we have you here, Stacy, I was thinking as well what this might mean for a company in Mobileye. And I know that there are certain companies that are in your coverage within this deal and then those that are not. But Intel having a sizable stake with Mobileye, if they were to take an investment like this, how much pressure do you think they would face to really remove themselves from or trim even more of that stake?
Yeah, so there are very few areas where Qualcomm and Intel really overlap. That is one of them, right? So so Qualcomm has a fairly sizable, compared to Mobileye at least, they have a decently sized automotive business. There are only three companies that really have a full stack self-driving solution. It's Qualcomm, Mobileye, and NVIDIA, and so they do compete. Qualcomm, Mobileye. So yeah, Intel's already talked about. I mean, they have I can't remember. It's an 88% ownership in Mobileye. Yeah, they'd probably have to divest. They've already kind of talked about that. Eventually, they'll divest it. Probably. This is not a great time to do it. Mobileye's down a ton off of its peak. But yeah, presumably they would have to divest it. They've also got another piece of the business called Altera where they don't overlap. But Intel has already talked about IPOing that business at some point down the line. So I don't know that any of those things would change. And in fact, they would bring in some cash that might help with the deal leverage. Although, again, my math suggests that even if they did it, it likely doesn't help the leverage position enough to de-risk it sufficiently, in my opinion.
All right, Stacy, always great to get your insight, especially on a morning like today. Stacy Rasgon, Bernstein Managing Director and Senior Analyst. Thanks so much for taking the time to join us.